bring to you if you raise your hand. And the governor will be happy to answer questions in both official languages. Avant de poser votre question, s'il vous plaît, essayez de vous identifier et je vous demanderai également d'utiliser le micro sans fil qui est... OK. Qui n'est pas là en ce moment, but we're working on it. So, vous pouvez poser vos questions dans la langue officielle de votre choix et on va commencer tout de suite pendant que nous cherchons le micro avec mon ami. Yeah, no, we're going to go ahead.
Go ahead.
Yeah, yes, go ahead. Speak loudly, please.
Yes, okay. Good evening, Governor. I was wondering. Yes, thank you. You mentioned, or you of course would know that core inflation has now moved up above 2%. How confident are you that all of the pressure we're seeing on inflation right now is temporary?
Okay, so our measures of core inflation are all clustered around 2%, and so I think of them as 2%. And that's exactly what our models would suggest they would do when the economy is operating at capacity. So that all fits our expectations. We pre-advertised that actual measured inflation, headline inflation, was very likely to go well above 2% this year. And that's because of high gasoline prices, some time ago when we knew that would happen. And that if gasoline prices go up a certain amount, what happens is inflation picks up. In this case, we think it's on the order of 0.5. It was actually 0.7 a month ago, so it's already beginning to dissipate slightly, the bump in inflation and headline inflation from gasoline. So we could do the arithmetic around that and figured that we would come up closer to 3, and it turned out to be 3. And the reason it got to be 3 was because there was an extra 0.3 bump that came from airfares this summer, which also seems an unusual move. The history of airfare inflation is highly volatile, but in a sort of a range. And it went far outside that range this summer as they made some changes to methodology. So either way, those things go into the headline inflation rate. The most they can stay there is for 12 months, because even if those prices stay high that long, they gradually come into the base for doing your year-on-year calculation. And this is why we can be so confident that they'll be temporary, that we can look out the window and see that gasoline prices are not rising every month further. They are higher than they were a year ago, and the year-on-year growth rate, therefore, is up there. But as we get closer to the point when it's 12 months after they went up, then it falls back to the more trend inflation. And this will be the same thing for airfares. So these are special effects, which we think are temporary, not temporary in the prices you pay, but temporary in the way inflation is measured. That's the important distinction. And for that reason, we can be confident because it's just mechanical. It's not even a forecast. It's just arithmetic.
Do you have a follow-up? Because the mic has reappeared.
There we go.
Hello. We're wondering about the discussions you held before your December meeting and the idea of discussing whether a gradual approach to tightening was still appropriate. What's going on in the economy that makes that a worthwhile discussion to have, moving away from the idea of a gradual move up in interest rates?
So if I can clarify, I think you must have meant the September meeting. You said December, but you mean the most recent meeting. Yeah, so obviously over the course of the summer, we had a steady flow of reinforcing data that were consistent with our outlook, so no disappointments. Almost always there are some, and there really weren't any. And so throughout, you become increasingly confident that you've got the narrative right and that the numbers even are right. And so when the data for the second quarter came out, even though we'd had a period where many forecasters were revising upwards their outlook for that quarter, the bank, of course, doesn't do this. They put it out, and we wait 3 full months before we report on it. And so we have to live with that forecast where other forecasters put out, updates, on a continuous basis. But they were expecting a much bigger number when it came, and when it came, it was 0.1 different from our original forecast. That made me very proud of the staff, and it just shows that the underlying story that we've got, I think, is the right one. That gives you increasing confidence. And so, as we mentioned elsewhere, that when we got into the September meeting, there was a discussion around, well, we do know that interest rates need to move higher in order to maintain our inflation target. Is the data coming in exactly as planned, a reason for moving more quickly or less quickly, well, in this case, more quickly? And our conclusion was no, we still have a number of uncertainties that we're carrying. And we said we'd be gradual, and we meant it because of all the things that we are carrying in the forecast, such as the NAFTA uncertainty. We really don't know how this will turn out. The uncertainty that I talked about tonight is about the supply side of the economy. We have to read that in real time. And indeed, the effects of higher interest rates on the economy are only beginning to come into focus. So it's an important matter because we changed the rules around mortgage lending at the same time that interest rates were rising. So you have two things happening at the same time in the mortgage market, and it's hard to disentangle from all those data what's doing what. We're going to give you a report in time for the October MPR, which will be clarifying around that, at least with the data that we have so far. It's going to help us separate out those effects. So all that to say, our confidence is growing, but we remain wed to the gradualist idea because fact is there are still many things we don't know.
We will go to the back.
You kind of touched on it in your speech already, but I want to go back to this disruptive digital technology. Would you be able to give an example of an opportunity, say a job opportunity, that might be challenged by this disruptive technology and how that's affected the Canadian economy? If a specific example comes to your mind of disruptive technology?
Well, so many people are familiar with investment advisory services. Okay, so certain institutions now, when you can phone or you can work online with an investment advisor, and that investment advisor in many cases has gone robotic. That it's an artificial intelligence that's a computer that's answering those questions. And I mean, basically they're asking you to provide certain information, or they may have access to your basic information. And so when you pose a question, they have a pretty thorough set of inputs into an answer, and we know we're getting a kind of stock answer. It's not a customized answer per se, but it's still a very intelligent answer. And that may be sufficient for, just ordinary investors, that, aren't super sophisticated in what they're trying to do. They're just trying to decide if they should have more exposure to the stock market or less to the bond market, or vice versa, those kinds of questions. And so it used to be that phone was answered by a person. So that job may be gone, but what is that person trained to do? They're trained in finance. Could they work in the same financial institution, perhaps on mortgages? Probably. So there's mobility. Are people retiring every day from that bank? Yeah, of course they are. So there's turnover, and it's possible that they can move within the bank to some new job. Or they can, maybe they did take enough computer science when they were in school, and so they can move into an IT maintenance type of role instead. And this is what I meant about the amount of adaptability, I think, is higher than most people give the system credit for. Because the new jobs that are being created are well-paying, and the money gets spent, and that creates jobs in all the ordinary sectors. They don't spend all their money on new IT products. They spend their money on a house and renovations and so on, and that creates jobs in the very places where a displaced worker in manufacturing could fairly easily make that transition because they have skills that have been developed in manufacturing. They're applicable. The machinery may be different, but it's still machinery, et cetera. So I'm arguing that the adaptability of the economy is stronger than most people give it credit for, basically.
Do you have a follow-up? No? Okay, so we'll go to the front here. Inda? Just wait for the mic, please.
Hi, Governor. So my question is about the job vacancies in Atlantic Canada. As you know, probably that there's a lot of people looking for jobs, and at the same time, the BDC just recently released a report that says that 50% of Atlantic Canadian businesses are going to face worker shortage in the next 10 years. So where is that gap? Where is the gap? Is it perception, like you mentioned, with adaptability, or is it in the private sector or the government's programming?
Well, the honest answer is we don't know. We know there is a big gap, as I said, 464,000 job vacancies, and at the same time that many companies say to me that they're having trouble finding the people that they need. So there's many ways to at least think about closing that gap, and one might be at the macro level. Like if it is geography, maybe there are other government programs we could develop to make it easier for people to relocate, even if it's temporary, that kind of thing. Those are possibles that I really shouldn't comment on further. Those are fiscal questions. But on the company side, how many companies are waiting for just the right person as opposed to saying, I see smart people are applying for work, but they don't have the skills I want, but they're smart people. Realistically, how long will it take me to help them understand what they need to do on this job and grow them on the job? An apprenticeship-like type of arrangement. And I think there could be more of this, and that, of course, would help close that gap. So a lot of, I say this to companies, and so many of them have in-house training, but it may be fairly narrow. They need to take someone that's a little more raw, or someone maybe that has experience in, let's say, manufacturing that may not apply at all, and yet they're hardworking and clever and willing to adapt. So this to me has the biggest prospect for success. But there's also the new graduate, the new graduate that may have focused on a specialty and then is disappointed that they can't find an opportunity in the town they'd like to live in that field. And I understand that disappointment. I mean, I hear that all the time. I think we all need to be ready to adapt more and think of our education not as training us for a particular job, but training us how to think and be able to understand new material so that we then can take a job that's in a field that's different and apply those tools in a different way. And I think on both sides, both the workers and the employers need to be able to be more adaptable to this. And I'm hopeful that, at least half of those vacancies could get filled. That would be a tremendous boost to the economy. In a year, if we have a really good year, we might create 150,000 new employment outcomes. And there's 3 times that many sitting there empty. That's a big amount of capacity that's not being fulfilled.
You have a follow-up? No?
Just a little bit, but
yeah, go ahead.
With the technological advances that the whole country has seen in Atlantic Canada specifically, do you think that businesses are slow in adapting, or are we too late in adapting because there's a lot of people that are already displaced by automation and stuff?
I think maybe it's in a way when you lay out the numbers like I have, it almost sounds too easy, to just overnight find the matches. And I don't mean to convey that. It is hard job. Though there's always a certain level of vacancies in the market because people can't find each other, right? And and I think certainly in terms of new technology, I mean every day I hear about or meet somebody or read about these advances, so I know it's all happening. The investment numbers are solid, so I know it's happening. And we know investment's probably stronger than it looks because, as I mentioned, if you just subscribe to something on the cloud, you don't have to invest. It's just an expense that you pay. And so we know there's quite a bit of that, and so it's as if there's more investment going on. So all that to say, I think we need a certain amount of patience, but what I was hoping to do tonight is to help people understand what the underlying dynamics are. And I'm hopeful that, over time, fewer people will be afraid of it. I do feel that people are afraid of the unknown about whether their sector's the next to go automated, and that they'll lose that opportunity. And I'm hopeful they'll understand that there's more other opportunities being created, and adaptability will be the key to capitalizing on them.
We'll go to the front here. Camille.
Bonsoir, M. Poloz. Vous avez parlé ce soir d'avancées technologiques, numériques, et qu'à long terme, ce serait bien, en fait. Nouveau-Brunswick, ici, c'est un défi particulier. Il y a plusieurs entreprises qui ne sont pas connectées, qui voudraient ça, qui ont de la misère. Comment ça peut s'appliquer ici pour nous, pour redorer justement l'économie?
Ben, c'est une question individuelle pour chaque entreprise. C'est facile à dire que vous devez investir comme ça, ou employer ces gens, etc. Mais c'est une question très individuelle, une question d'optimisation pour l'entreprise en particulier. Et ça coûte d'argent, OK? C'est l'entrepreneur qui met son propre argent sur la table pour investir. C'est une situation risquée, n'est-ce pas? C'est possible de perdre tout. Alors, moi, c'est très facile dans un sens abstrait pour moi, pour dire, on doit avoir cela, cela, cela. Mais c'est vraiment la théorie, pas la pratique. Et moi, j'apprends beaucoup en parlant avec ces gens pour comprendre leurs problèmes spécifiques. Alors, comme je l'ai mentionné, c'est une question d'être patient. Je suis confiant qu'il y a du progrès. Et de temps en temps, on pense qu'il n'y a pas de progrès. Et soudainement, il y a une histoire comme, par exemple, le centre cyber qui émerge en Fredericton, par exemple. C'est incroyable. C'est juste à cause d'un ou deux professeurs, un programme très appliqué et éventuellement une masse critique. Voilà. Alors, on ne peut jamais prévoir comment ces pièces deviennent quelque chose entière. OK?
And we'll wrap up with Chris, because we're running out of time.
Chris Morris, all Nova Scotia. The U.S. Central Bank is looking at a series of increases. I think there's another one coming in December, several next year. To what extent does that influence what you can do, what the Bank of Canada have to do in terms of rate increases? Does that in any way dictate what happens here?
No, we both have independent policies. We both are targeting inflation in our respective countries, both 2% inflation, by the way, roughly. So in other words, they're very consistent targets. But the business cycle and the two economies can differ quite a lot. So I remind you, like in late 2014, when oil prices collapsed by more than over 60%. That decline in oil prices fundamentally would be a positive for the U.S. economy because they're a net importer of oil, and was a very big negative for the Canadian economy because we're a big exporter of oil. Well, that meant that the Canadian economy was very likely to slow, and our inflation target would be at risk on the downside, whereas the U.S. economy would accelerate. During that year, the United States raised rates, and the Bank of Canada cut rates twice. So that is just a good illustration that we are not driven by what's going on in the U.S. At the same time, we of course have to take that into account. So if interest rates are rising, and I don't just mean the Fed rate, but if the whole yield curve is rising because of tighter monetary conditions in the U.S., Canada will inevitably import some of that bond market movement. So on average, as much as 2/3 of it, but let's say around half at least. So if you had 50 basis points in a long bond, 10-year bond in the U.S., you'd probably get half of that in the Canadian bond market without the Bank of Canada doing anything. And so that will naturally feed through to our mortgage market and the credit conditions in Canada with the Bank of Canada rate held completely unchanged. And so, of course, we have to take that into account. But it does not mean that then, for some reason, we would need to match or follow or any of that. We would recalibrate our own situation based on what we observe, and that would be one of the new ingredients. At the same time, the exchange rate can adjust to this as well, right? And so that too would need to be taken into account in recalibrating when we do our forecasts. And then our forecast would either have an upward tilt in growth compared to before, or a downward tilt in growth compared to before. And correspondingly, the risks on an inflation outlook 2 years from now would be either up or down relative to our target, and that would dictate how we needed to adapt our interest rate policy. So that's disentangling it scientifically, but the fact is both economies are in an upswing. In both economies, we're looking at higher interest rates because that's sort of like returning to normal, more or less. And we just aren't really sure yet where normal is. And that's about how sensitive the economy is to higher interest rates now because of all the debt that we're carrying. How are the B20 guidelines on mortgages affecting the economy? And the supply side stuff that I'm talking about tonight, which is really important actually to both economies. So all that makes it complicated, but much more complicated than does their interest rate move somehow constrain you? No, it's just to be taken into account.
All right, so that will conclude our press conference. Merci beaucoup d'être venu.
Thanks, everybody.
Bonne soirée.
Merci.